Hello there, Maverick traders. This is Rob Reinhold. It is September 28th. September is almost over. That will mark the close of the third quarter. We only have one quarter left to go this year. In this session, we are going to go over what happened today. We had a green candle. We had a little bit of a hint that was going to happen yesterday with the long lower shadow. But did it change any of our analysis? Did it change any of our numbers? Did it change anything? We'll take a look at that. And as always, we're going to take a look at some setups for the trading tomorrow.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
Let's take a look at the markets today. Now, we did get an up candle, which again, like I said, we got a little highlight from yesterday. But let's take a look at the news. And I want to talk about this government shutdown that's happening in the US. And I'm going to be spending a lot of time on this tomorrow when I prepare the trading room for the weekend, because the government is most likely going to shut down in the US over this weekend. What does it mean? And I'm going to break down all of the numbers of all the government shutdowns that have happened and what we typically see. Now remember, anything can happen at any time, and just because we have averages of what happened the last 10 times doesn't mean it's going to happen, but it definitely gives us some idea of where this market is. We also got the GDP revision out of the second quarter. Now just think about where we are. Third quarter is almost done. A couple days left in the third quarter, and it's done. This is second quarter. Now, the way the GDP works is you get the initial reading, you get the actual reading, and then you get the revised reading. Today, we got the revised reading of second quarter GDP. It came in as expected, but what happened and what changed was they revised the deflator down. Deflator is the inflation measure. So inflation is even better than what they thought in the second quarter. So that gave the markets a little pop in the pre-market futures, and then it completely sold off. We actually opened down on the day. Now, I want to jump into this candle first, and then we'll take a look at the numbers. But you can see here, we gapped down today from a candle with a long lower shadow. And you can see that we bottomed out a little bit, and then we had more buyers and sellers today. We do have an upper wick that tells us it wasn't the strongest close we've ever seen. But take a look at the price action. We've had big selling on the way down. We got a hint with that long lower shadow yesterday that there possibly could be a bounce. We said if there's a green candle, that means there's going to be a bounce. We got a green candle. So at this point, we are looking at this saying, okay, we're likely probably going to head up to this resistance right around 43.40. You know, that's about 40 points away. So maybe another 1% left in the markets. We may or may not get there, but that's just what the charts are telling us. Now, by the end of the day, the Dow had made a gain of 0.35%, S&P up over 1%, Qs and the Russell was where the strength was, almost up 1%. Oil took a tumble, which actually is going to help equity markets with it up in the mid-90s, and gold weakened as well. As far as the market internals, it was a mildly bullish day with 65% of stocks up. But take a look at how many stocks are under their 50-day moving average. 4 out of 5 stocks. This is an ugly market here, and we are still in a bearish move. So we already took a look at the S&P. I want to take a look at the NASDAQ. Now, again, this is the Qs, and this is the NASDAQ 100. And you can see that they have held up better. The S&P is trading below its last lows, and we're basically trading right at it. So we got a nice doji yesterday. We got a confirmation candle today. We're going to make a run up to probably this area here in the Qs, maybe around 362 would be on the Qs where I would imagine there is some next resistance. But the Qs are outperforming a little bit when you take a look at the charts. That being said, everything is still lower. Moving averages are still going lower. We're in our 6 weeks of the worst seasonality in the markets for the year. So we still have to be more bearish than bullish. Here is the heat map. You can see utilities got absolutely slaughtered today, and the rest of the market was mildly bullish at best. So the question is did this candle change anything? And we score it as, is the market above or below the 20 MA? It is clearly a mile below the 20 MA. Is it below the 50 MA? It is a mile below the 50. Now again, 2050 slope, we haven't scored that yet. We are going to be updating this over the weekend, but we do have a short-term little bounce here. So we've been at a -2 on the market, and we said that this week was going to be another mildly negative week. I would not be surprised if tomorrow is another green candle, but I don't think it's going to be a very big candle. There's a lot of technical damage done, and until the technicals fix themselves, we have to stay tilted towards the bearish side. So let's go ahead and take a look at some possible trades here.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Based on where we are in the market cycle, we've had 6 or 7 big down days, about 5% in the market. It's about ready for a little bit of a bounce. We saw that long lower shadow the day before. We got a confirmation candle today. So look, I'm not going to lean heavy on the bears here. I think we can get ready for shorting new stuff after this market bounces. But right here, right now, the market is kind of poised for a small bounce. So I've got a bull, a sideways, and a bear for everyone here today. And on the bullish side, I'm going to take a look at AYX. I talked about this one last week, and look how great this thing is holding in. This thing got absolutely obliterated back here on earnings. It bottomed out, got some news here. I don't know what it is. I don't care. And you can see here, it has refused to go down. It has absolutely refused to go down as the NASDAQ has been falling, as the markets have been falling. This thing has actually been strengthening. Once this market gets a little bit of strength, this thing is ready to go. Now, there is a whole bunch of overhead resistance right here in this 38. And so we are chewing through this resistance here. Once it breaks out above, it's going to be ready to go. That being said, this isn't a bull market, so you can't be all that bullish. I think 40 is a stretch on a target. If there's any strike prices lower, I think you pick those. So if there's $1 strikes, then you go with like this 37.38 vertical spread. If there's not those, then you go for like the 35.40, and that's about it. You can't really go much more bullish than that, as the market isn't really telling us to be overly bullish. On the sideways one, this is Amicus Therapeutics, FOLD. Now, it had some news about a drug being approved by the FDA. The stock went down today off the news. Again, I don't care about the news. All I care about is the chart. There was some good support here, and at one point, it looked like that was going to be completely demolished. Look at the spike in volume off this news. I'm going to be opening up a butterfly right at the 12 area. So I think this is going to stay at the lower end of this range. But the thing I love about this setup is that today there was a spike in volatility. There was a spike in volatility, and I want to be a seller of volatility. I just don't want to sell naked options, so I'm going to do a butterfly. So an October 11, 12, 13 butterfly, to me, we've got that spike in volatility. I'm going to take advantage of that. And if it breaks out of these ranges here, above like 1280 or below 1120, yeah, it'll be a loss, but anywhere in this range here is going to be a nice little gain, and we're getting in a little bit of a pop of volatility to add to the trade. And on the short side, here is Warner Brothers Discovery. Falling down, rally, fall, rally, fall. We got a little 2-day rally here, and we got a bearish engulfing candle. Not a great candle here at all for this. Look, it's 10 is the target on this one. So pretty wimpy trade, 10-11 bear call spread going out to October. That is going to give us 3 weeks on this trade. this is a very simple trade. It's either going to go below 10 and be max gain, or it's going to stay in this area and be a mild gain, mild loss, or it's going to bottom out and strengthen and it will be a loss. It's that simple to it. Those are the great things about vertical spreads. It's just you set it and forget it. Let's talk about tomorrow. This was a tough week for the market. We had a lot of rallies that fell apart. A lot of times during the day where things look good, only to be sold off. We finally did bottom out on Wednesday. We got a little bit buying, but look, the buying today wasn't great. It wasn't just a super strong day. It was a bounce. That's it. We could easily see a little bit more follow through. We did get Nike earnings after the bell. The stock is currently up about 2% after market. Oh, sorry, it's up about 3.5% now after market. So I think that's going to give the market a little bit of a boost. I think tomorrow is a mildly up day, maybe up, 0.4, 0.5%. However, there is some major news here that could wildly change that. If there was no news, I would be very confident in this slightly bullish candle to end the week on a limping note. We got the core PCE price index, and that's a big news. That might, if it comes out wildly different than expectations, either too hot or too cold, it's going to have a move on the futures. If it comes in online, I like my premise that we just limp out for the rest of the week with a slight up candle on Friday, and then we come back next week to see if this little bounce can hold in the market. That is it for the Market Roundup. Thanks for joining me. Take care, everyone. Goodbye.